Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, central banks are back on the top of the risk list. The ECB had a very dovish meeting last week and then followed by, on Friday, the PBOC, People's Bank of China, cutting rates. Now, those two actions have had a profound impact across markets. Forex and equity markets especially. Big drop, dollar strength, big equity markets move higher. So strong risk appetite across those markets. And we move into this week, and there's a little bit of a slight retracement of that move, but still the legacy of those decisions have continued to rock through the markets. And probably will continue to do so this week because we've still got a lot going on this week in terms of central bank decisions. We've got the Fed, we've got the Bank of Japan, and also the RBNZ, Reserve Bank of New Zealand, as well. Now, the actions of the PBOC especially, I think, are very interesting because it sort of gives the Fed a bit of a quandary, really. It sort of puts them into a bit of no man's land, really, as to how to react to it, because the dollar strengthening is in effect disinflationary, and as is monetary tightening from the Fed. So it sort of struggles to sort of mean that it can push ahead with its tightening cycle potentially. And then again, you do have these easing measures from the PBOC that obviously are designed to try and settle down the volatility in the markets as well. And as the Fed alluded to in September, volatility was one of the main reasons behind it not moving. So you've got this sort of double-edged sword there, the counterbalancing of the two arguments. So it's difficult to know exactly the impact on the Fed this week. Probably a bit early to understand whether the actions of the PBOC are going to be able to stabilise sentiment in terms of the economic slowdown, or concerns over the economic slowdown in China. So maybe a little bit too early to judge on that front. But still, we've got this Fed meeting on Wednesday. It's a statement-only meeting. There's no press conference. There are no staff projections or anything like that. So we just get the impact of the statement. Whether the statement gets changed by the actions of the PBOC is difficult to say at this stage. I mean, the chances of a rate hike for the States at the moment is probably around about 8 or 10% according to the Fed Funds futures, and certainly for December, as the chart shows, it's around about 38 to 40% chance or probability of a December rate hike. So still unlikely for December now. We're still looking out for probably March of next year at the moment. So quite how these probabilities change in the coming weeks will be dependent on, again, also monetary, in terms of data. There's a lot of Tier 1 economic data for the States out this week. You've got the first look at Q3 GDP for the US, and also the all-important inflation data for the Fed, that is the core PCE data. So those two bits of economic data could have a driving impact on the potential for a December rate hike, but we'll wait and see how those go through the end of the week. So how are all these aspects impacting on Forex markets? Well, we've got the dollar, which has strengthened significantly last week, and that's had a big impact on the euro dollar. The euro dollar level broke below that 111 pivot level area. I still believe there's a 50 pip pivot area between 110.50 111. It closed below that 110.50 point, so I reckon that flips the outlook within this range all the way down now. So I think that reopens the lows of this range towards 108.10. And I think that resistance, the pivot area now becomes an area of resistance for the euro dollar. So it'll be interesting to see how this one plays around this week. Could be a lot of volatility once again, though. In terms of cable, we've had a sliding of the cable price, and it now is potentially in charge of a test of the 52 figure point, which is a key support. 52 figure was a key low a few weeks back. And if it breaks that, it was a higher low, so if it breaks that, you're looking back at 51 figure once again, which is again the lows of the range. In terms of dollar yen, again range bound. Still, it's had a big rally up towards the top of the range, and again on Monday it's just started to slide again. The range high is coming at 121.70. I don't think it's going to be breaking out through that. I think it's going to continue to remain range bound, and the movement on Monday sort of reflects that move as well. In terms of the commodity currencies, we've got the Aussie and the Kiwi, which had been sliding after some strong recoveries actually. It'll be interesting to see how they sort of go again. The Aussie seems to be trading once again pretty much well correlated with the gold price, so we'll watch out for the movements on both of those in the coming days. In terms of the commodities itself, certainly the gold price, as I said, with the Aussie has been sliding, following on from a strong breakout. Very interesting support between 1156 and 1170. Those two levels, or that support range, I think needs to hold to maintain the positive outlook medium term. I think if you break below 1151, I think that turns to neutral, and then more bearish, I think, on a move below 1136. In terms of the oil price, well, again, sliding back. Again, the pressure from the stronger dollar has not helped the move. And 43.20 is that big support on WTI. That breaks down, you're looking back at the crucial lows of 37.75. So throughout the rest of this week, what have we got to look forward to? Well, as I said, we've got a lot of tier 1 data. We've got some key central bank meetings, but also on Monday we start off with a new home sales for the States. Not expected to do a great deal there, pretty much in line with last month. But then on to Tuesday, we're looking at UK GDP. Again, first reading of UK GDP for Q3, expected to come in around about 0.6%. Then US consumer confidence on Tuesday. Wednesday, we're looking out for central banks. We're looking out for the Fed in the evening, and then the RBNZ a couple of hours later. As I said, the Fed is not expected to do anything on Wednesday. Thursday, we look at the first reading of GDP for the States, and also then we're looking out for Japanese inflation data in the evening, and overnight on Friday morning, we've got the BOJ. Not expected to ease monetary policy, although there is a debate as to whether it could do or not, because obviously Japan has just fitted into deflation territory once again. But the big debate being, what can it actually do in terms of JGBs? It already holds about half the market anyway, so it's a moot point really whether it could actually extend that and do anything with it. So that's on Friday. So quite a lot going on this week that we need to be watching out for. Ending on Friday with the core PCE for the US, so the inflation data that the Fed looks at. So big data that could be driving the markets and volatility. So I wish you good luck in your trading throughout the week, and I'll speak to you again soon. Thank you.